Entrepreneurship is tough, but corporate entrepreneurship is probably even tougher because you have to deal with all the, politics and organizational dynamics and everything. You are an investor. You kind of push your founders to achieve, what you promised to do, to enter in the market. And if they burn out, well, your investment is gone.
Welcome back to Understanding VC. I'm your host, Rahul. Understanding VC is a perpetual MBA on a single subject, venture capital. Today, I'll be chatting with Sebastien Picard, founder of xcube, a Singapore-based corporate venture studio founded in 2023, about their unique ecosystem approach to building ventures. Also, one quick note. Are you looking to refresh your digital presence? Digital Prism, the Singapore-based digital transformation expert sponsoring this episode, has a fantastic offer. First 10 listeners to contact them get 20 free consultation hours. Just mention Rahul sent you. And also learn more from the link in the show notes. Now let's talk to Sebastien. Hey Sebastien, thank you so much for joining me today.
Hi Rahul, thank you. I'm very happy to be here.
So, xcube is a venture studio, but then my understanding is that unlike typical other venture studios, you act as a ecosystem co-founder rather than like a general co-founder for startups.
When you look at the ecosystem for innovation in country, you have different ecosystem partners. Traditionally, we have incubators and accelerators. These structures support external founders. In the recent year, what we have seen is emergence of a new type of ecosystem partner, which is startup studio or venture studio. A startup studio is actually a bunch of entrepreneurs coming together and actually creating startup from within. So they don't collaborate with at the outside world. Venture studio is a bit the same, but they actually helps corporation to excubate the idea that when they want to innovate their core business, they usually excubate the ideas and give it to the venture studio to help them to co-found their ideas.
So how do xcube differentiate with other venture studios?
Yeah, compared to the other venture studio, we don't help a corporation to create one single startups. This is what most of our competitors or friends are doing. We help them actually to build ecosystem of startups. So we create what we call a corporate venture portfolio equities for them.
Yeah. So I'd love to know two things. One, what is the corporate venture portfolio equity model? And also, what inspired you to create this?
Yeah, so as I said, we create an ecosystem of those ecosystem is actually it's composed. It's a group of startups that we unite together to address major global challenges or some market opportunity. Including in this ecosystem, we create what we call an ecosystem company, or often it can be called an orchestrator, whose role is about to create all the synergies and manage all the business flow, innovation flows between the different startups that compose that ecosystem in order to achieve strategic goals and financial goals. The CVPE model is actually designed specifically to foster collaboration, co-innovation, and shared resources between the different actors, but also to bring some kind of community support between them in order to be more resilient and to face all the challenges that the startup is facing. To answer your second question, the CVPA model can be traced in my former startup that I co-created. When I was developing this startup, I realized that we didn't have all the knowledge, the scale, technology, and the speed, or the marketing power to achieve what we wanted to do. We wanted to have a breakthrough innovation. But the reality of any breakthrough or disruptive innovation, they are always the outcome of multiple small invisible innovation that happen in different spheres. And so if those multiple invisible innovation are not here, the breakthrough innovation cannot happen. And then this is what we realized, that if we want to make our product successful and adopted by everyone, we need to innovate here, we need to innovate here, we need to innovate here, having all of these things coming together. If you want to address global challenges or pioneer a new market when things doesn't exist, well, you need to have multiple flows of innovation that comes together, and you need to be able to institutionalize them. And then now you have your breakthrough innovation. So This perspective, actually, when we think about innovation or systemic innovation, actually, it flattens the world. It's a shift toward what we call a flat ontology, where things are conceptualized not in the traditional sense where you have the macro, the meso, and the micro lens, but rather as action nets that are related and connected each other by relational flows. So the idea of the ecosystem is really like rethinking the way we do systemic innovation by having all of these different action nets and link them together instead of having this emerging innovation coming. Is being a little bit more strategic and try to be more hands-on to actually design all of this little innovation and pull them together. For that, you need multiple startups because they are in different environment, they have different technology, different know-how, but you need to orchestrate them through an orchestrators that link them all together.
So could you explain this with an example, like an example that people can easily relate to, or maybe one that you've already created?
So usually when you have this kind of ecosystem, you want to tackle a major market needs, market demands, or global challenges, like not like a single product. When you look at today the environment, you have big actors organizing into a business ecosystem, and the competition is actually not anymore about business model or product, what is my unfair advantage, but to be part of the robust ecosystem. So one of the things that we wanted to tackle with xcube is about financial inclusion. I have a past in fintech, so it's my thing. So I wanted to, how we can address financial inclusion challenges. And when I was looking at what is it, and I said, why we are not yet there? Why there's still so many people that are actually excluded from the financial system? Whereas we are talking about that from years and decades actually now. I realized that the approach is always like, okay, try to have a one-size-fits-all. But when we look at financial exclusion, it's a lot of multiple different problems that countries are facing or even people are facing. So the way of, to address financial inclusion is to develop multiple product market fit. Today, when you go in Africa, you go in India, you go in Southeast Asia, while the product that we are offering actually that doesn't really fit the regionality of the problem. To make that happen, you need to have some kind of modular system in order to create solutions that fit the specificity of the market. To do that, you need multiple startups working together. So, for instance, we use what we call a real FI. So, real FI is actually blending traditional banking practices with Web3 technology. Tackle financial inclusion, and DeFi is actually great. It's a great thing because you kind of break down a lot of regulatory constraints. You can also break down a lot of cost for the banks. They cannot actually target those people because it's too expensive. So the DeFi is enable that because it's cheaper. You can do peer-to-peer transactions. So the cost of offering financial services to people who are excluded is great. However, it's pretty much inaccessible for them. So what you need is like having this ecosystem, startups, you can do DeFi, but also you need to be able to have some kind of what I call Web3 literacy, teach them how to make that happen. So we have like a 3 startup working together around that point. We have a trading deck where actually you can do DeFi. We have a trading platform as a community, which helps people to learn about DeFi, how to trade crypto, what is a crypto, how to make that happen. So you have different products such as copy trading. But then we put an AI company on the top of that to actually analyze your behaviors. So when you start to trade, probably risk adverse at the beginning, but then when you get your first loss, then you want to recover. And then this is where you become more gambler rather than a rational investor. So this AI actually analyze your own behavior. So you can learn how you behave when you trade. And then they can send you alert when actually you are not anymore rational. So this kind of like a mechanism improve like a Web3 literacy. But then it's not yet enough. You need still to have a connection with the real world. That's why we have what we call a wallet as a bank, which is basically your wallet when you have all your financial asset there as if it is a bank, but they are on the Web3. Everything is hidden. They don't see the Web3. The people don't see the Web3 element. So they have like a traditional web app, but all of the assets are here. And they can use it as a bank, and they can connect to all the different services that they need. But to make that connection, in order to be regulatory compliant, we need a KYC solution that do not only the onboarding, but also anti-money laundering. But when we talk about financial inclusion, usually we are talking with people who can't have access to financial services. They can't have access to anything because they are under-documented. So we created a solution which is a decentralized KYC solution that helps actually people who are under-documented to build a financial identity over time in order to have access to more advanced financial services. And all of that are different companies working together on their own solution, on their own market. But when we combine them and we orchestrate them, then this is how we can develop solutions for tackling financial inclusion challenges.
Yeah. So it's essentially like a suite of maybe products and services coming together to solve like a common big problem.
Yes, it's about that. But instead of being independent product, they are started developing themselves different features. They are the best at doing a wallet. They are the best at doing KYC, KYT, and that actually the wallet and the KYC, KYT address two different people.
Yeah.
And then the wallet is mostly for individuals or retailers, but the KYC solution is mostly for the banks or for financial institutions. So they are on targeting different group of people, but they need to come together in order to tackle financial inclusions.
Yeah. Okay. So this is what you talk about when you talk about collapsing of industry boundaries and shifting towards a sort of ecosystem-based competition.
Yes. Today, I mean, with the digitalization and what I call the datatization from the economy, you can see that the creation of value is not anymore around one product, but it's spread around different type of industry. If I take the example of Rolls-Royce, for instance, they are building engines for airplanes, and they started to connect the engines with a lot of different connectors to collect data. And having all of this data now enables them to offer different services to the airplane industry, so that they are not anymore like probably the engine companies, but they are more like the service as a platform as services, when they can, with all the data they collect about the flight, they can help companies to improve the maintenance of the flight. They can help them also to reduce the costs. They can offer a lot of different solutions and services through the data. So that's where the collapse of the industry somehow would disappear, because the data actually are transversal and can enable the person who are owning those data to create other solutions, other product, and diversify the portfolio of product. So just take another example. If you take Grab started as the Uber in Asia to use taxi, but now they started to move in different industry. You can pay with Grab, so they are becoming a fintech. Then we can deliver food. So you have those platforms that connecting the supply and the demand plus the data, actually create some kind of collapse of the industry. And now it's more about being part of an ecosystem. We need to think about what is this ecosystem is doing. The competition is about having your own ecosystem, but it's pretty expensive and it's very hard to manage. Sometimes it's better to be part of the winning ecosystem. It's great enough.
Yeah. This kind of approach, right? Like, what is the sort of advantage for the three sort of stakeholders? One is a startup, the investors, and also the corporations.
Yeah, so because we do venture building and we build ecosystem, we realize that when we talk about corporate venturing, which is venture studio is one of the elements of corporate one of the mechanism of corporate venturing, and you have multiple others form of doing corporate venturing depending on the stage of where you want to enter and collaborate with the startups. When you look at the corporate venturing program, there is no really links between all the different initiatives that they have to create some kind of synergistic framework and really innovate beyond the core. It ends up mostly as an opportunity investment that they're here and there, some kind of a patchwork. And then there is no really like a strategy coming, to link all of that and really create new growth platform. There's many reasons that are happening, and one of the probably most critical challenge is how you balance strategic objective and financial objectives. Strategic meaning more long-term, you give the time for the startup to pivot and to grow and to build the business, where the financial objectives are usually more like a short-term. So, okay, I've invested, what is my return on investment? But the other challenge that we see that how you reintegrate the startup within the entire mothership company into the business. And here you have a lot of cultural misfit, you have a lot of like organizational resistance. It makes it very different. And very often the startup is making like, even if the startup is making like a 10 million revenue annually, it's a drop in the ocean of the mother companies. So nobody really cares about it. So the way we were thinking is like, how has actually we are shift our view and paradigm of corporate venturing. Instead of saying like being a corporation activity, how it is actually a collaborative activity between the different stakeholders. We are talking about corporation collaborating with startups, but we are not taking the point of view of the startup, how we collaborate with the corporation. And then this require a lot of like finance in coming into that. And even if it is a corporation that invests through is a CVC program, it's a different stakeholders and a different objective. So basically you have like a three element, and it's a very simplification, but it's three elements. You have the corporation that try to innovate beyond their core. You have the startups that try to have access to resources and a market and support from the corporation. And you have investors that want to finance innovation, but also to get a return on investment. So with the way we try to set up the CVPE model is like how we can maximize the interest of every stakeholders. They are part of the ecosystem if they vested interest is actually maximized. So how we can maximize all of this vested interest, but in the same time having this kind of like a global vision, how we do strategic alignment. So the idea is having to create a distributed vision, between the different person that actually maximize the vested interest of the stakeholder. That's the main challenge. So for a corporation, as I said, the objective, I make it simple, is how they can innovate beyond their core, and how you will define success is if they succeed to launch a new growth platform. That will be the KPI for corporation. Very several, but the main KPI will be this one. For the startups, it's a little bit more difficult because they all joined corporate venturing or an ecosystem or CVPE model for different reason. It can be access to resources, access to market, having some support, having some financing. So more difficult to have some kind of KPI. But they all see the value of working all together because they become stronger together rather than alone. When you are an entrepreneur, your journey is very lonely, and it's great if you have peers that support you. And because they may have faced the challenges that you have, and then they can bring you some ideas, they can help you actually to face this difficult time. From xcube point of view of a CVPE model, what I would consider as a KPI and a success of a CVPE model for when it comes for the startup is that if you see a high rate of co-innovation, so they can come together and they can create new product, not the product that they have, but new product by combining the product features and capabilities in order to tackle new market that was actually inaccessible for them. That's probably how I will assess the success of the CVPE model from the startup point of view. From the investors, though here the investor is clearly like a return on investment. Yes, if they want to finance innovation, they want to have impact, but it's clearly a return on investment. So the model is trying to accelerate and de-risk innovation for early stage, to coming them together, to be more resilient, to be creating some diversification. The CVPE model is kind of a new class of asset in the portfolio of investors. It sits between VCs and direct investment into the startups. So what is the advantage of investing as an investor or as an LP in the VC is that you benefit the diversification model. So basically, you hope the power law will work, that 80% of our revenue will be generated by 20% of the startups. To be honest, this model has kind of a little bit breakdown. It doesn't work anymore, but there is some great advantage. Basically, if one startup failed, the other one can compensate. However, the inconvenience of that is that you're going to have like a 10% within the company. So you have a lot of 10% everywhere. So you need still a lot of good exit in order to make a significant return on investment. On the opposite side, you have the direct investment into the startup. Usually you can get more equities. And you are a little bit more hands-on, you have more transparency of what's going on, you can control, you can bring more support, you can help the startups to grow using your network. The inconvenience of investing directly into the startup is that if the startup fails, you lose everything. While the idea of the CVPE model is to take the advantage of these two models and try to mitigate the risk of each of them. So actually, investor is going to invest in an ecosystem company. So an ecosystem company or the orchestrators is not a portfolio company. Why is so? Is because it's not just holding the asset, but it's also to be hands-on and more strategy oriented and try to build actually co-innovation and co-product that you're going to actually sell on the market. So it's really the company that actually sells the ecosystem. So you invest, you are hands-on into it, you're more equity into that company. But now the money that you invest is going to be used to venture build some certain of the startups. So when you venture build, basically you own it 100%, or let's say you give a bit of part of the co-founders, but you can between 50 and 70% you own the startups. So when you do an exit at that level, it's the return on investment is pretty significant because you have a lot of stake. You can also do corporate partnerships. So basically, you're going to create some kind of joint venture with an external corporation that have a great technology, but doesn't want to diversify that technology in new market, and you see value into it. So you just collaborate with them, take the technology, so you accelerate and you de-risk your innovation because the technology is already there. And then you have this, investment in external startups. So here is more like the traditional CVC model, where you invest in certain startup who usually need some fund, and then you get 10% of equities. But what you do is product integration. So when you do product integration, they can enrich your ecosystem. So you create for an investor some diversification. But not only is diversification compared to the VC between different multiple startups, it's between different type of startups. And then they all are actually linked into the same strategy, which can create some surplus of valuation at the ecosystem level, because your ecosystem company is actually targeting some market and generating revenue and access to market that will be inaccessible to every type of the startups. So you create this kind of complex diversification, which is great for investors. Also, you have if one of the startup is actually failing, we can buy back the asset. So the startup is failing, but we buy back the asset so we can still make, still the ecosystem is working. It's we use the technologies that they have, we use a product, and is actually owned now by the ecosystem company. So you have this kind of resiliency of your portfolio if one of the startup is failing, while the other are here to compensate, but we can also buy back the asset. And then the last point is if you suppose your ecosystem company is failing, it may happen. What we do is just now we turn it into a portfolio company holding the asset of the startup, which is underneath, and you can have one of them become a unicorn and get still a very significant return on investment. When you start from scratch, you have the support of nobody, and it's pretty scary. I know this is what we call the dark side of entrepreneurship. I talk a lot about that. It's people are dreaming about entrepreneurship. They see it as a hero, but there is a dark side of entrepreneurship. So how we can mitigate that dark side? I think being part of a startup that we are venturing in our ecosystem, it's a good way.
It's not like a whole team. It's more like one or two people who can support the internal sort of initiative that you're trying to bring in from outside.
It's an entire team, but you build it you need, I will say usually what we have is we work with this kind of entrepreneurs, like we call it, someone who can lead the business, who has the capacity to grow the business. Usually you have some product development skill and knowledge or some kind of business knowledge. But usually we go more for someone which is more like a product development oriented because we pioneer the market at the level of the ecosystem. And then we bring some solution architects, and those two guys are the most important to be part of the company. After that, the team is joining. There is some ESOP to make them participate to the life of the startup, but they are not considered as co-founders. So we are looking for as you're right, one or two person to be co-found the company with us, and then after we hire the rest of the team.
Okay. We didn't talk about the investor side of things. So the investors mostly invest in xcube directly, or
no? They invest in the ecosystem company.
Okay, so we directly.
xcube is creating the ecosystem company with the corporation.
Yeah.
we create it, depend the split, depend the negotiation with the corporation. But every investment is every ecosystem company is significant investment. So for a corporation, especially for mid-sized organization, they may have a great technology, they may have a great market, but they may not have all the financial resources needed to set up such an ecosystem. This is where you collaborate with LPs, some investor come in there. So the way we do is we create some syndication around those investors to invest within the company. Then they take a major stake because they invest a significant amount of money. Usually what we expect is like having between 2 and 3 fundraising before we can exit. Where we target is an exit usually between 6 and 7 years for the first investors. There is different mechanism having the LPs. It can be a fund, it can be an SPV. There are different type of mechanism, but entities will invest into the ecosystem company. Then the ecosystem company is having its own activity, which is creating, orchestrating the ecosystem, but now is actually using that money either to create startups or to invest into doing traditional corporate venturing, investing in multiple startups. So that's the advantage of that model, is that the ecosystem company is creating some kind of a buffer between investors and some usually more like short-term oriented objectives and founders at the level of the startups who are more like long-term oriented. And then the ecosystem company is actually creating that buffers and try to maximize the interest of everyone.
So I'm also curious to know, like, how do you align interest and sort of increase collaboration between all the startups in an ecosystem? And also, one other thing, I read about this psychology sort of team that you have within xcube.
Yeah. So it's 2 different questions. I'm going to explain both of them. Strategic alignment is the most difficult things to get, but it's a main KPI of the orchestrator. I need to be able to align all the different interests of the different actors. That's why we need to understand the perspective of each others and what are the different activities that we make them align. The idea is to be a translator. How I'm going to translate the investor concern to the startups and vice versa, and with the corporation is like considering if they are interacting in different spheres, they have their own bias and own paradigms, a way of seeing things. So how you translate the ecosystem and the benefit that the ecosystem can create for them in their own words. And that's the role of the ecosystem. When you make a corporation and a manager from a corporation talk with the founders, we don't talk the same language. They do speak English or whatever the language, but they actually don't talk to each other. They don't understand each other. So this is where the ecosystem is playing this role. Is like it's bilingual. It can talk corporation and can talk startups. And that's the idea of the ecosystem, how be able to talk to everyone. And by talking and bringing them with reasonable people, then it's kind of this is where you get a consensus where to go. For one of the significant where we foster collaboration or co-innovation. Well, the secret is like, don't give it to the founders or the startups, because you want them to actually focus on their core product and actually increase, and create some traction and growth on their market. This is where you want them to focus. You don't want them to be distracted by something else. The ecosystem is actually companies taking the responsibility of the co-innovation. So all the team come together, try to identify what are the possible synergies and then co-innovation opportunities between the different products, because they also know the market. And then this is where the ecosystem solution architects start to say how this co-innovation is feasible or not feasible. When it is feasible, we prioritize which one we're going to start, so different co-innovation opportunities. We validate that with the different stakeholders, and then from there, we implement the co-innovation. So we execute the co-innovation programs at the level of the ecosystem. So the founders are not distracted by anything, but they allocate a small portion of their resources and time to the co-innovation, but most of it is taken by the ecosystem. So we leave the burden of the co-innovation and the synergy creation between the startups to put them at the level of the ecosystem. Another One of the things that the startups, to answer your second question about
Psychology.
the psychology support that we bring. xcube is kind of like one of the differentiation factor that we have compared to the other studios, is that we have a corporate psychologist. I'm going to ask you a question, it's like, okay, you're an investor, you're a business angel, and you invest in early stage startups. I'm going to ask you, what is the most critical asset in which you are investing?
People.
The people. Yeah, that's the people, because technology is not there, the market is not there, they need to pivot and everything. So I'm going to ask you, what do you do to protect your asset? And here is like,
what can you do?
What can I do? I don't know. And there is some kind of, like you say, I'm going to bring like a coaching and all of these things. But there's some kind of like a paradox. You are an investor. You kind of push your founders to achieve what you promised to do or to enter in the market. But at the same time, you want to protect him. So there is a kind of a contradiction between when I heard that some VCs are saying, we bring coaching and support to the founders. On one hand, you calm them down, and on the other hand, you push pressure on them. It's kind of like, a little bit schizophrenic. So the idea is what we can do for them. And so we were discussing how we can avoid them, to get into the dark side. One of the common things, if they can burn out, your investment is gone. And then suddenly they decide to do, like they have family issues or anything, then the mindset is over there. So again, your asset is done. So what we do is that we help with our corporate psychologists. We help them to understand what is actually to be an entrepreneur. There is the nice and beautiful, the light side, but there's also the dark side. And so we help them to build coping mechanism to avoid to enter in the dark side of dark entrepreneurships. For that, we help them to build what we call the psychological capital, which is based on resilience, self-regulation, and optimism. So how to manage that together and having a stock in which you can tap in over time to face the challenges of an entrepreneurial life. And how actually you also refill that stock over time. Entrepreneurs need to have a balanced life. And so do you work during the week and you don't work on the weekend? Well, the reality is not like that. Sometimes you really need to work 24 hours, 7 days a week, and you work like crazy because this is the time of doing it. And this is where you start to tap into your psychological capital. But then after, you need to figure out, okay, now I'm reaching the point of no return. And so here, what are my tactics in order to fill that capital? And then this is where our corporate psychologist is helping our founders to define this moment where they need to recover. And then they can always come to her to speak about their issue, what's happening. It can be issue, can be whatever. Like you just need to have this safe space when you can talk with a professional. Yeah. And everything that is said in that space, stay in that space, and the person helps you to become stronger.
Yeah. So internally, how do xcube measure the success and also the impact of the model, CVPE model?
Yeah, the success of it depends. It's difficult to define a success. It's always difficult. What means success is a long-term discussion between academics. Again, the success will depend on the point of view we are taking. So if we talk about corporation, again, it's probably the success of the CVPE model is that I have a new growth platform. I have developed and launched a new growth platform. It's not like corporate venturing to have access to one little technology or one product. And when you integrate them, it's a drop in the ocean. So now you have with the ecosystem, you have a major growth platform that goes beyond or extend your core business. Would be the success for corporation.
So it would be like if you can create a major growth vertical.
This is exactly that. You create a new business unit, that you have a business unit. So either you plug and play, you keep it as it is, or then over time you can reintegrate it into your core business, but it's self-sustaining. And that's the key thing of the ecosystem is self-sustaining. And so you can integrate, you can keep it at that, or if you decide, you know what, this is not what we want to do, but you can resell it. You can IPO the ecosystem and you have a return on investment of what you are doing. But the ecosystem is self-sustaining, so the startup are protected and they can still strive on their own market. So that's the advantage of the ecosystem. For the investors, as I said, it's the return on investment in a short time. So how we work is between an exit between 6 and 8 years, which is a little bit better than VCs. Why is possible is because we collaborate with a corporation from the beginning. So when you reach a valuation of the ecosystem around 100 million to between 100 and 200 million, it's actually the sweet spot for a corporation to buy the ecosystem. After it becomes too expensive, under that, usually you don't have enough traction or revenue. So the sweet spot for a corporation to buy, to do M&A is usually around between 150 and 200 million USD.
Nice.
So that we believe we can reach between 6 and 8 years through the ecosystem dynamics and synergies. And for the startup, the success is, I define it personally, because as I said, every startup have different perspective and reason to join the network, but I define it as the rate of co-innovation. The higher the rate of co-innovation and the most successful is the CVPE model, because it showed that they are part and collaborate all together and created some synergies, and they are not just here as a free ride.
So, how do you see this model evolving in the future?
That's a great question. We are launching a CVP LinkedIn group to invite people interested to discuss how we can improve that model, how we can make it better over time. So that's an open question. How I see it evolving personally, it's AI. You can use gen and predictive AI to create your ecosystem. The dream I have about xcube is everyone coming on xcube, xcube.co, and then I want to create my ecosystem and enter my different parameters, and a lot of things is done automatically, and we're going to tap into different data in order to offer some solution. We can scout different companies, assess and do the diligence of different startups to be part of the ecosystem. Now, I do believe that AI can help for that. The Web3 can actually also helps to create some kind of decentralized orchestration. Today, the orchestration is really centralized around the company, but with Web3 technologies, you can create a decentralized orchestration, which will help to have an ecosystem which is global. Today, our ecosystem are very localized. It's a very Southeast Asia. But with this kind of like a technology, I hope we can, have like a CVPs that are global and, making a corporate startup in Japan working with the startups in Peru, for instance. So we are not yet there, but this is something definitely I look at and start to integrate. And I think what will be the technology and the model and how it could work. My wish in terms of impact, I wish that we can make corporate venturing great again. It used to be like some hype, and there is a lot of disappointment with, among corporations with corporate venturing and CVC model. If the CVP model could be the next wave of corporate venturing, I will be very, very happy.
Why the disappointment with the traditional CVC model?
I think there was some kind of overselling of what is it. Also, it's a new activity, rather new activity for corporation. So everybody was excited, having some dream about the startups. We're going to collaborate with startups. We're going to have innovation. We're going to create a, innovation culture within our companies. So they have all of this hype around that. Because the reality is always nuanced, right? Nothing is easy. And so we're like, okay, we're going to collaborate with startups, great. And then we're going to create our own corporate startups. But we forget about the inertia and organizational resistance that exists in the traditional business. And we don't really take that into account when we sell corporate venturing, when we, actually within them, where you have all the HR people trying to have like a, oh, you are an entrepreneur, you want to do the startups, yeah, let's do it. And so there is this kind of internal marketing, selling the dreams. Well, but again, entrepreneurship is tough, but corporate entrepreneurship is probably even tougher, because you have to deal with all the, politics and organizational dynamics and everything. And then from the top management is like, oh, okay, I have this new startup, but it's doing 1 or 2 million, revenue.
Nothing.
It's nothing. It's a work. So you have this kind of disappointment around corporate venturing that emerged over time. We got better, and we see that, for instance, EDB is launching his new corporate venturing launchpad program, the new one 3.0. So they know that it's still important and they push for that. But one of the major concern of EDB is how we can educate and helps company to develop that capabilities and get better. And we are now at the 3 edition of that program, and we are still not yet there. So it's a long way to go.
So what is then the next step for xcube?
So for xcube is it's a rather young company. We have the company is 1 year old. So our main objective was to build a studio and come up with a pilot project for the CVPE model and see how it works. So this is where DeFi emerging, and we put things together. We are very satisfied. We have very good feedback from the product. So now it's the time for us to make the CVPE model more known and create brand awareness around that. So as I said, we are just created a CVP LinkedIn group where people can come and join and learn about CVP or share experiences. Criticism, we are all welcoming criticism to improve, but to make that model aware and probably creating the new wave of corporate venturing, we are going to launch soon our white paper where we have a description of how all of this model is working and what are the advantage for the corporation, advantage for investors or startup, also advantage for an ecosystem. When we talk about, I was talking about EDB, and we are promoting this corporate venturing activities among startups and corporation in Singapore. How actually that model can enhance the Singapore ecosystem for open innovation.
Yeah, this was great, Sebastien. Sebastien, thank you so much for taking the time to do this again.
Thank you, Rahul. It was a pleasure to be here with you.